Coming to you from the Tar Heel State, this is the Carolina Commercial Real Estate Connection, bringing you industry insights and hot takes from Carolina real estate experts, helping you begin, grow, and scale your commercial real estate portfolio. And now your hosts, Tony Johnson and Cameron Pearson.
Randall's here joining us. This is Carolina Commercial Real Estate Connection. This is Tony and Cameron checking in. We're having Tyler Randall on the show today. Tyler, thanks so much for joining us. Where are you out of, Tyler?
I'm based out of Atlanta, and I appreciate you guys having me. Excited to talk to you.
Yeah, we appreciate you jumping on. Can you give everybody a little bit of background about you, what you've been doing?
Yeah, so I used to be a military physical therapist, and kind of during that time, realizes that financially I wasn't going to get where I wanted to be, and so slowly started to engage and educate myself to the point where I was able to take down a fourplex and work with some partners to acquire 52 units of Class B multifamily in Knoxville, Tennessee. At this point, I just go full-time commercial real estate, and currently looking at scaling, acquiring retail, flex industrial, and medical office. One of the unique things we're working on right now is, as many investors have been facing, finding a good deal that makes sense. Finding a true off-market deal is a hard thing to do. So we've leveraged someone's platform to build a call center that's solely targeted at finding commercial leads. And so while doing our own investing and scaling the call center, those are kind of our two big projects right now.
Oh, wow. So can you tell us a little bit about your call center? What exactly does it do?
Yeah, so right now we have, we've started back in about February. And so we've got a few commercial clients, and the goal is essentially we find the data. We have found the most success using CoStar or Reonomy, and so we pull the data within the parameters of what either we want, or if we're doing it for our client, what they want. So asset class, year built, square footage, etc. And then we are able to leverage some outsourced call agents who will call 40 hours a week. So we can cover thousands and thousands of leads a week. And we're really looking for that sub-institutional owner, someone kind of owns a property within that $1 to $4 million range. And we're able to generate about 3 to 5 leads a week for a client. And a lead would be someone that says, hey, I'm indeed the property owner. I do want to sell, and I want to sell within the next 3 to 6 months. And so that's kind of what we're executing for people.
And you're generating 4 to 5 a week. I mean, that's really good. It's impressive. But all these are off market.
All these are off market. Now before this, I say this is the best thing since sliced bread, right? There's a good portion, I think a lot of real estate investors, if they haven't taken on any sort of off market lead gen, there's a good amount of leads you have to work, right? There's maybe a small percentage that are ready to close immediately. Hey, I'm ready to sell them within the next 30 days. And then there's a good portion that you need to build that relationship with. And over the next coming months, you'll start to see that you can convert that into a closed sale. And so there's a good portion of those leads that, again, you have to have your own kind of sales pipeline built in. So that way you can do the necessary follow-up to execute that lead.
I see. So if I'm an investor coming to you, you're going to bring me 3 to 5 leads a week that are warm leads that have the potential to close, not necessarily ready to sell, but have the potential to close, right? Is that the idea?
Yep, that's most, there's the occasional, there's definitely people who, especially depending on how your script is set up, and we work with investors on that. We run them all and just make sure that the language and how we represent them is the way they want it. But there are some who have the pie in the sky dreams, right? I want something absurd for my property, right? And so those aren't the most immediate converting lead, because again, as working that, you're going to educate them about the market. You're going to educate them about what these are actually trading for. And And so some of those, I wouldn't call them a hot lead, right? They're kind of more of just a lukewarm lead, we'll call it. Like, hey, I want to sell, but my expectations are potentially unrealistic. So they're a portion of that. So you kind of get that mix of leads, if that makes sense.
So the expectation, I guess, would be then, if I'm coming to you as a client, that I would get 3 to 5 leads a week for whatever the parameters are. And then of the 3 to 5 a week, they're going to be warm leads that have the opportunity to close, but they might not be ready to sell for the long term. So I need to have some type of a script that I am keeping up with them in order to move the process forward, and then keep them in a CRM pipeline and blah, blah, blah. So it's just, you're eliminating the need for me to call the 500 people to get those 5 people. Is that the idea?
We cut out for just a quick second. Do you mind recapping that last little bit for a sec?
I just want to clarify. I'm trying to make sure I'm understanding it properly, and so everybody else can understand it properly, I guess. So if I'm understanding it, you're saying you're going to give me 3 to 5 leads a week. They're going to be warm to hot leads, depending. I need to have some type of a script in that when I'm talking to these clients to kind of make sure I'm moving them forward. And that's, in essence, the service is saving me having to call 500 people to get those 5 people. Is that right?
It's exactly right. Yep. So the expectation, and even more so than I would call it expectation, is for you to see success, right? If you don't have a process to handle a bunch of leads, particularly, if you don't, we're going to assume you have the experience, and that's part of my job, is to making sure we have someone who can do something with the leads. Because what we don't want is for them to have a bunch of leads and then they're unable to execute on any of it. But yeah, if you need to have that process, because there's going to be a percentage that are hot, and then there's going to be a percentage that are warm, and you have to continue to do the lead nurturing process for those warm leads.
Okay. I think that's critically important. So do you, with your process of what you're putting together with the leads, do you offer anything to help them through that? Or is it your parameter of someone that you're taking on already has all that set up?
We help people build, if they're not familiar with the CRM, then we kind of help. We have some preferred CRMs, and we help them set that up so they know what right looks like. If they have a preferred CRM they're already using, then we will work to just integrate to their platform. So we'll have them build it, an input page, so to speak, on their CRM, so that we can just plug that in directly. So any lead we get for them goes into the CRM, so they're not having to change any of their procedures. On the sales side, that is a product we're working to build out. Is we're always trying to figure out how we have a better product for somebody, and so creating the sales piece of what does a normal lead nurturing sequence look like? What are some sample ways to do this, or to build that relationship with the owner? Those are kind of an ancillary product we're building as part of our whole service, just so that people can have better success with using us as a lead generation service.
So what percentage would you say, or how do you differentiate between the leads you're going to sell and the ones that you want to go after yourself? Because you guys are doing that as well, correct?
Yeah, so that's if it's for the client, that's even in our agreement, it's everything's theirs. So once we generate it for you, that's kind of your IP, so to speak, right? That's and so that is your lead. What you choose to do with it is up to you. If someone was looking for the exact same asset classes and the exact same markets that I was, at very first I'd have a discussion with them up front, just full transparency, hey, I'm looking for this stuff too. Is there some nuance where we can separate? And it would be something where I would want to kind of service the client first. So if I don't think that I can, in an unbiased fashion, give them what they need, I probably wouldn't take them on as a client, just because I don't want I don't want to mix those two different things where they wouldn't, fully ever be able to trust, hey, maybe he's not giving me all the leads because he wants these. No, I don't want that. So I would avoid the situation for the most part.
It definitely sounds like it could add some value. I know, just going through everybody acts like it's so easy to pick these off-market deals up, like they're just all sitting on the corner waiting for somebody to call them, right? Then you call somebody, they hang up on you, they tell you they don't want to sell, they have no interest in selling, leave me alone, don't ever contact me again. I won't sell till I die. It's always something, and you really have to be fully invested to capture these off-market deals. Meaning you have to consistently stay up with people, constantly be mailing, constantly be calling, texting. There's a whole entire system that you have to keep up with to get a couple of these off-market leads. Otherwise, you're just kind of spinning the wheels. You might as well find somebody with your expertise that can, take the ball by the horn and get it ready for you. And that way you can focus on what you're really trying to do, which is buy real estate. I think, it's a great service. What do you think, Cameron? Is that something you feel like it would be useful for you?
Oh, 100%. So that's going to take off the table. Not everybody's good at that. Most people are not good at that. So the cold calls and converting leads is really probably the weakest point of most any person. So when you can find that aspect of it and bring it to what you're strong in, so you basically hired your weakness, I think it's genius. It's great. It's a good way for you to focus on what you need.
Yeah, I think that's an awesome service. So let me just run through this real quick, just so everybody could, get an understanding, Tyler, on how this is structured. So when you're doing something like this, do I sign a 1-year contract with you to get this going, or is this really expensive? How does this kind of lay out? Is this a monthly fee? Is it a lead-based fee? How does someone pay for this? And
yeah, that's a good question. So we have it structured as you kind of pay for output. So we do monthly agreements, we do 3-month agreements. I would pursue a longer agreement if it's someone who we've kind of built a relationship with, and we've seen the success that we expect to see, and we might look for a longer agreement. But in general, I think for people looking to get in, we do month to month or quarterly agreements. And cost wise, it depends a little bit, but you're looking at probably $1,900 to $2,100 a month to do that, for us to pull the data, scrub the data, format the data, manage the dialers, manage the call agents. And these guys are in formal call centers, right? They're not just in their bedroom out on the farm, with the animals in the back or something, right? It's they're in a formal call center, have all the equipment. They have managers, floor supervisors. They go through a bunch of training specific to commercial real estate before they onboard for a campaign. So we're trying to provide a very professional product here. And so that fee kind of is all inclusive, so to speak. So we kind of handle all that back end stuff for you. It's daily reporting. So we give you a KPI sheet where you can track, how many leads, what's our contact rates, which is how many conversations you have relative to how many dials you've made. That's a big KPI you want to track. We have all this, kind of fully transparent. You can listen to the recordings, all that stuff. So that's all built into that monthly or that quarterly agreement.
Well, that's really not that much different than if you did it on your own.
Yeah, I think you realistically
together on your own.
Hey, you should realistically expect to spend if you did it your own, you have obviously all the work of setting it up, but if you're gonna have them call, you're looking at paying at least probably about $1,000 a month or $900 a month just to pay someone to do it all, and then you're fully responsible for everything, right? So again, I think if the goal is to leverage your skills and what you're good at, if hey, I'm trying to close real estate and do deals, you might save just a little bit trying to do it yourself, but I think you have to ask what's the opportunity cost, because any of these good commercial deals, if you can get 20 to 30% below market, the return on that ad spend, so to speak, on those lead generation services is 15-20 times. And so, that's amongst the highest in the market for any sort of return on ad spend for other businesses. So I think it's something where you have to consider what's the opportunity cost of me trying to do it myself, unless I fully have the scaling capability to do so.
So Cameron, do you have any other questions on that? Or do you?
Well, no, unfortunately, I'm already ready to sign up. So I think that's great.
There we go. That's what I want to hear. Yeah, no, and some of the, I think for this to really work, for people to see the success, we can get the leads in the door immediately. That's something I've seen again and again, but you really got to expect to do 3 to 6 months, I think, for the momentum to build, to really kind of build that pipeline. So you start to have consistent converting leads. Because you're going to get a bunch of leads again up front that are warm. And we've had a couple where within 2 weeks we got someone who went under contract, right? And I want that for everybody. I don't think that's necessarily always the case. So you have to expect that 3 to 6 months, because now you have enough leads built up, and now you're getting that percentage conversion every month, and now you have a more consistent converting pipeline. And so I think that's what success looks like. It's not, I'd love to say it's like single family, where you can do this and get a ton of leads and you get multiple closing every month. But commercial just doesn't work that way. And I think a commercial broker could probably tell you the same thing.
Yeah, absolutely. And you're exactly right. When we, just to go back, what you're saying is, even the expense of this, if you're, saving, I know, I always I'm looking off market, then it's, contact a couple of owners, I get nowhere. And then what do? I go right back to looking what's on the market, and then just trying to work those, right? And so the idea is, if you're spending that and you're able to not have to put in the time trying to make the contacts of the warm leads, which is where you get frustrated because you'll find one person is interested and you're not really interested in that property specifically, and then all the other ones that you like, they're not interested in. But just to get one that fits the parameters, and then you're 20 to 30% below market, that's where you're trying to hit anyway, then there's some meat on the bone, and it makes a lot more sense. So, man, that sounds awesome. I think that could offer some value for a lot of people. And I don't know a lot of people know that that's even out there being offered, unless you're really getting in the swing of it. I know a lot of people try and do it on their own, which is good. But if you've got the means, it sounds like a great option, right? I mean, obviously you have to have some money set aside to get into commercial real estate.
I think, I think a lot of real estate folks aren't marketers, right? Just kind of inherently, that's kind of how the industry works. And so it is, sometimes there is that, they just don't have the marketing dollars that they're willing to spend, even though if there's a proven way to do it, I think just that's kind of unique to the real estate industry is a lot of people aren't used to marketing and consistent marketing. So yeah, that has to be part of your business plan for sure.
Too. So the way you guys are setting it up as far as tracking and seeing conversion rates, that's where I think another piece that's a pretty big gap that most people don't understand or follow through with.
So let's find out a little bit more about what else you're doing. So you're doing this, and then you're also investing yourself. And so you have multifamily projects that you've already been investing in. How long have you been doing that?
Yeah, so the multifamily we've had and it cut out for a second, so I apologize if I missed part of the question. We've we bought our Fulton 52 units back in what was it? It was February 2020. So a unique time to
oh wow.
time. to be executing a deal and closing. We didn't know how COVID was going to go. Luckily, it was in Tennessee, and just the way the state ran with that, it worked out better for us probably than other states. But we've had that. So what is that? That makes it about 3 years. And so yeah, Class B, it was probably 30-something% below market, all the rents. The guy who had built it still owned it, and there was late 90s build. So little deferred maintenance. He really cared for the property, just at the point where he wanted to retire and get out. And so we ran that, repositioned it, saw a lot of rent growth right in Knoxville, Tennessee. And so that property's been doing well, and it's fully stabilized at this point. So it's been a good consistent property for us.
Awesome. Well, just based on the market, maybe we can dig in a little bit on this so we can just kind of understand how you move forward on this project and how it's going to pan out based on the current market conditions. Obviously, when you guys were underwriting it, did you happen to underwrite it based on a 7.5-8% interest rate on the exit?
No, we did not. Yeah, I think we were under at we were a little bummed that we got, I think it went up maybe 25 basis points, and we were at like the low 4s or high 3s on our original interest rate. So we did not foresee 400 basis points increase in the interest rate there now.
Right. So looking at that, so let's go through on what's the term on your loan?
So it was a 5-year term. We refinanced a couple of years ago, or like a year and a half ago. And so when we refinanced into a 7-year term, so we're at a point where we can definitely ride out the storm, so to speak, a little bit. I mean, we're a little bit more risk averse and a firm believer in remove risk off the table where you can. So getting fixed rate debt, long-term fixed rate debt was a priority for us. So that way, because we knew when we were buying too, that we're somewhere near the top of the market, right? Just based on business cycles and real estate cycles. So we want a long enough term to where we can, we expect a downturn, and we can kind of, if we're going to refi again, we're going to be forced to refi kind of mid next cycle. That was at least the goal.
And were you guys were able to get it up to market on rents when you said you were 30% below market?
Yeah, so we were, but then it's just the surge of rents after COVID. I mean, so what became market, I think, market was about $950 a month, and market became $1,200 within a matter of a year and a half. So we're still lagging behind market now, just because it increased so much. And just, the year-long leases and the turnover, we haven't fully gotten back up to market, so to speak. I mean, we surpassed our original business plan. It's a good problem to have. That's right. We surpassed our original business plan, but yeah, I think we're still finishing getting up to market, so to speak.
And so did you do that with a couple partners, or how did you do the deal?
Yeah, no, I'd like to take more credit here, but it's really my partners who have been awesome on this deal. We worked with a group, it was a JV, and they have a large portfolio in the Knoxville area, large enough, in fact, where they vertically integrated their property management teams, and they even have a capital expenditure team just focusing on those items. And so they had a really firm grasp on the market and had the personnel and the processes to really get after that reposition. And so they did a lot of the heavy lifting. And so it's more of been a lighter asset management role at this point, because they took on a lot of that up front. And then we've just been keeping an eye on performance with them taking the lead.
So Cameron, this is a lot like what we were talking about, on the last discussion we were having, where when you're getting into this, and you're newer and you haven't done larger deals, getting in with experienced partners and making sure you're teaming up.
Huge.
The importance of that is humongous, right? So this is living experience of, how well that can work out. Sounds like,
yeah, I mean, you can
their business plan, it seems like they're exceeding all their expectations. So, that's fantastic. But yeah, Tyler, we were talking about that the last time we were having one of these discussions. And yeah, that is so important, that you find people that already have systems set up in place, that have the experience, and, lean on their knowledge, gain understanding, and learn from them while you're doing the deal with them. And that allows you to move yourself to the next level. We all have to learn, constantly be learning and bettering ourselves. So that's a fantastic idea. Now, how did you come into contact with these guys that you ended up partnering with?
Yeah, it's a good question. So I was dabbling around with single family, and ultimately made the decision, hey, what do you really want? Where do you want to end up? And it's like, I want to end up in commercial. And so I ended up joining a kind of a private mentorship group specific to multifamily. And I think for those who don't have a finance background, right? I mean, that kind of the job path for real estate finance, you can get to some of these institutional firms where they're doing commercial, and that's where you get your training and exposure. But if you're not going that route, there's a lot of multifamily coaching now, but I think traditionally getting into it was just not, the barrier was high because the access to information was limited. So joined that group, and through going through their program and meeting a lot of people at various events throughout the years that were networking within that group, ended up finding our partners for this deal, and they were boots on the ground in Tennessee, which was an important piece to have a presence there, of course. And so that's how we found our partners, and made sense for us to do a deal together.
That's awesome. Now, are you ever considering doing any more deals with them, or you just, now that you're going into the other asset class, do they still just do multifamily only?
Yeah, some of them just do multifamily. One of them, they've branched out a lot into RV parks. So they've taken down our 3 RV parks in the last couple of years. So I would do an RV park deal, I think, just because it's still a fragmented industry. There's still a lot of upside and mispricings because there's those mom and pop owners. Multifamily, I'm not as keen on. I think it's a safe asset class. I think there's a need, and especially in the Southeast, depending on your market, there are still housing shortages. So I think the downside of multifamily is pretty limited. It's just there's been a lot of money that's moved to multifamily, so the returns you're getting on average just aren't as good as I think what you can get in commercial and some of these other asset classes. And so in that instance, I'm less, if a great deal we came across a great deal and there was a role for me to be probably more of a money, capital raiser versus an operator, I might consider that. But I think from an opportunity cost perspective, it makes more sense to go after these asset classes with more upside.
That's cool. So Cameron and me, if we're looking, we're investors, we're new, we're listening here, and we're like, man, this Tyler really seems like he knows a lot of what's going on. Well, this guy can really fill in some pieces for me. I got to get up with this guy and have him help out. What do you feel like you bring strongest to the table as a partner when you're doing a real estate deal with people?
Yeah, I mean, I think my piece would be more of acquisitions, due diligence, underwriting. I think those are my character, like personality trait wise, it's where I naturally fall. And so I take those roles on. I've routinely taken those roles on, and those are things I'm definitely good at. I could raise some capital because I've built a network up over time. But I would say more of that acquisitions, due diligence, underwriting roles is definitely a strong suit for me. And then asset management, I'm a operations focused, efficiency focused person. So once the deal's under contract, executing on the business plan, which is where a lot of the value is going to be, right? Depending on what your business plan is, those would be the strongest areas for me.
Awesome. So
yeah, I'm thinking about the operations part, and so you're going to carry through. If you were to joint venture with somebody, you're going to carry through operations as well, or are you hiring that out?
I think it depends, which is it's one of those answers, right? I think for what we're looking at now, on the commercial side, the operations are such that it's well within my capability to do, and we would just own that, because once it's stabilized, the continued upkeep is going to be a lot lower. So you're going to have that tougher time during the reposition where it's more time intensive. You got to be on boots on the ground more. If it's something that's more operationally intensive, like multifamily or RV parks, so to speak, I would definitely lean on my partners for that. They just have more experience in those areas. And again, the operational intensiveness, I think a lot of people don't realize for some of these, it just sounds good to jump in some of these, but they don't necessarily realize what the asset management side and the repositioning looks like, and how much is really required to do that well. And so for me, it's the amount of work involved combined with the experience required to do well. That's probably less so me, and so I would lean on partners for those asset classes.
Which takes us right back to picking the right partners, depending on what you need. But that's obviously a strong point.
Yeah. So if we're going and focus on what you're doing, so if you're doing the acquisition and underwriting, what are you seeing when you're underwriting deals right now? What is the biggest problem you're seeing besides everything being twice what it's worth?
Yeah, I think with the interest rates going up so much, transaction volume, I think they've coined this phrase in a number of articles, but it's fallen off a cliff, right? So it's the transaction volume is significantly down. So finding deals just even brought to market slower. Owners are a little hesitant, even if you're getting off-market calls on what they want to do. And again, it depends kind of on the owner you're contacting, right? Industrial is probably more owner users versus retail, or other things are more investors. And people don't want to sell high. Well, not even sell high potentially. I mean, they may take a discount just because of where things are, but then it's also, what do I buy next? And so I think there's just a lot of people kind of on edge, hesitant, understandably. And so the market's kind of coming to a halt a little bit. There are still deals there. We're looking at a medical office deal right now that we should be getting under contract here shortly. And this should be a good deal. So they do exist, but I think it's just finding that person at that right time. But on average, it's just less deals brought to market. Sellers haven't fully adjusted still to the fact that interest rates continue to climb. And we've been seeing even debt, even the Fed, even though the Fed rate may have only gone up 25 basis points as of the most recent raise, there's just a lot of fear, I think, in the local lender market. After the bank failures, and then I think it was like 40-something% of all maturities coming up are local banks with commercial real estate maturities. And so they're a little on edge too, because they have a lot of uncertainty. So they're just baking in a lot of extra interest. So we were getting quoted low 8s on interest rates for some of these commercial properties, which just really, if you're going to use debt, it really hurts the deal.
And when the banking aspect of it, that's the opportunity may be around the corner, because once they start calling some of these due, people are going to have to sell, because like you said, replacing a 3 with a 7 or an 8 doesn't work. And then it's going to put some distress out there. So I think the banks, all this is coming in, and I'm pretty sure that we'll see some more opportunities here in the near future.
Yeah, but I think, in the interim too, I think that that's going to present some opportunity. I'm skeptical how much, because I feel like a lot of these, they're just going to work. If somebody's got these, optimally they're going to work. They don't want to take back the property. They don't want the property. They want to kind of renegotiate, rework the leverage on the deal to make it all work. I think it's very important when looking to try and acquire properties is to figure out answers for the sellers. Like when you say, what do I do next? So what does, we have to figure in the seller's shoes. So yeah, okay, the seller might want to sell. And so, how's that going to affect their tax situation? What are they going to, what's the intent of what they're doing with the money? So we really, whenever we're trying to make a deal work, especially an off-market property where someone, is considering selling but hasn't really thought it all through, you've got to be able to help get in their shoes and make them comfortable with the transaction. So you have to show them options that might affect their tax burden that they're going to get on the sale. So giving some creative terms for them to make the deal work, which you can work out for both parties, right? I think thinking ahead like that is really key in this kind of a market. So do you ever try and do anything like that, Tyler? Any type of creative deal structures? Hello, Tyler?
There we go. Just came back.
I was saying, did you lose me? Do you ever do that? Do you ever do any creative type of deal structure or terms when you're talking with sellers? Are you ever thinking on anything like that you can get a little more creative to try and make the deal work?
Yeah, I think with these smaller deals, there's the opportunity. And, when I say small, I'd say probably sub 3 million or so. I think there's the opportunity to do that. I think in this market, especially, that's even better to be looking at, because the conventional options are less appealing. And so I think, like you said, it's sales 101, right? People buy things because they have a problem they want solved. And so if you can figure out what problem you're solving for the seller, and you can use some, seller financing or some sort of creative structure to help them get what they want, and then, allow you to purchase the property, I think that's an increasing, that strategy will become more and more prevalent here as this market's turning, because that'll just be the option for most people. And so, yeah, it's, can you give me, there's the saying, right? Your price, my terms. And so, okay, if this is the must-have price, can we structure that? Can we do seller financing? Can we structure that in a way where we have maybe a longer amortization, longer term, no prepayment? We have a rate that's more appealing. And so that way it ends up working for you. I think, yeah, if you can do that, or if it's, hey, what do you want to do with the cash? Because if you sell this and you have a large capital gain, do you know that? Is that what you're shooting for? Or is it consistent payments? Maybe that's what you're after, because you just, you're trying to get out of the game, but you want consistent income, and consistent payment solves that problem for you. So like you said, it's understanding kind of what they need, and is there a way where you can solve that problem for them?
Yeah, it's really about, I think, exactly what you're saying. You've got to build that rapport, because a lot of, some people, sellers, and, someone that's not familiar with how some of these terms work, their first thought is cash only. I don't want to do any of these things. I just want the money. I want to be rid of the problem. I don't want the problem. So you have to make them realize there's plenty of different ways for you to be rid of the whole problem, have stable income coming in, lower the tax burden, and this money can continue to come, as opposed to you getting a lump sum in a market like this right now, where you probably can't do anything with all of this money that's going to benefit you. But if you could still obtain the payments that you're getting on a monthly basis, not get hit with some massive amount of taxes, then you can free yourself of the problems of the property that you're dealing with, right? And
Exactly.
It's a win-win for everyone. The buyer gets the opportunity to go buy that piece of commercial real estate that they want, and they can create value in whatever way. And then the seller has that opportunity to relieve the burden that they're having with the property, because they're not interested in updating it and fixing it and changing it all, re-renting it up, but they would love to keep the money and the income, right? So, I mean, I think really just thinking of these creative ways to structure a deal, it's kind of, no matter, as long as you can get creative, the dollar amount can probably be reached and agreed upon by both parties. It's just taking the time and getting the seller to understand exactly what you're selling, because some of these sellers just, they're not the most educated. They might have inherited the property. It might be a grouping. You've really got to might be a group of family members. You've got to make everyone understand. So these are the difficult tasks, right?
Yeah, exactly. Yeah, I think, just highlighting what you said before, rapport too, we never lead the conversation with, unless the broker, maybe it's the broker, a broker deal, but we don't lead the conversation with, hey, do you want to do seller financing? Do you even know what that is? And do you want to do it? I think it's kind of poor form. I think, again, it's building that rapport, getting to understand what their problem is. And then as you better understand their problem and have that conversation, then that can become a workable solution that you offer, but that's not something to necessarily lead with as well.
I think that's a great point. I mean, most people, especially right now, everyone's just like, okay, owner finance. Well, the owner, that might not be the right deal for the owner. So yeah, you have to understand the owner's pinch points, I guess, and what the owner's really looking for. I mean, that's a great way to look at it and great insight, because I find myself a lot of times, I'm just like, oh, well, from my point of view, this would be great if they own finance, but that's really, that's great for me, but I don't know.
No underwriting, no lender fee, some terms that are better for me.
Way to look at it. So you've got to really step back, and understand these transactions. I mean, these are big transactions, right? Even a $3 million transaction to the seller, that might be their biggest transaction of their life. They inherited it. This is all their inheritance, right? So you have to kind of, keep that in mind when you're going through some of these transactions. I mean, everyone's different, but typically if you're doing these smaller, $2-3 million commercial deals, these aren't institutional companies that you're dealing with, exactly. Right? So yeah, that's awesome. Well, I mean, I feel like this has been very informative, and I feel like, this has been a great conversation that we've had. Cameron, do you have anything else you want to ask Tyler?
No, just to, if you take it down to the basics on someone who's, the reason we're doing this cast is to just trying to give some more information around for new people getting into it. What would you say the first step should be if someone was coming to you and say, I really want to get into commercial real estate?
I'd say education is your first step, and a close second would be finding people who are doing what you want to do and figuring out how to add value in their life so that it's worth them helping you out. Because going in on your own without, the experience that you're just asking for, especially in today's market. So even though you ask for one, I'm going to give two, and that's going to be get educated and be valuable enough to make it worthwhile for someone else to help you.
If somebody's trying to get in touch with you, what's the best way to reach you?
Yeah, I think the best way to reach me is at my email. So that's Tyler at leadnexus, LEADNEXUS.co. So not .com.co, Tyler at leadnexus.co. I'm pretty responsive there. So just go ahead and email me there, and happy to, help, or if you're interested in lead services, we can help with that too.
That's awesome. Can people also follow you on social media? Are you on any of the
Yeah,
social
so
media?
you can follow me at Twitter. My handle's the _CRE_PT. That's my Twitter handle. So go ahead and follow me there and talk about commercial real estate, lead generation, cold calling, scripts, the whole thing. So
Awesome. Hey, man, thank you so much for joining us today, man. It's been great to get to talk to you and get to know you and understand what you're doing a little bit more.